Alright, let's get started on our discussion. Today we'll thoroughly review the market from a comprehensive wave analysis perspective. The very first financial instrument that will be introduced is the euro dollar. Let's begin our analysis of the euro dollar on the daily time frame. In this chart, we can observe 5 distinct waves forming in an upward direction, which are then followed by an ABC correction pattern. After this correction, the first impulse wave emerges, succeeded by another ABC correction. Notably, in this correction, point B is positioned above the peak of the initial wave, resembling a typical regular type of correction. Currently, the price of the asset is moving within a descending channel, and if it breaks out above this channel, we will likely observe a significant increase in value. Conversely, if the price bounces off the bottom of this channel, we will likely see a decrease, and in this scenario, we may still complete this type of regular correction pattern that typically follows such movements in the market. Today we have some significant news coming out, everyone. It's important to note that today will likely be a highly volatile trading day, so please trade carefully and ensure you manage your risks effectively. I have shared my detailed trading plans in the closed channel on how to approach today's market. Expect very high volatility around 8 to 9 o'clock, accompanied by a substantial amount of news that could impact the market significantly. News should be traded very carefully to minimize risks, and now let me show you the details of my trading plan for clarity. For now, I am strategically holding sell positions on the euro currency pair. Let's transition to analyzing the 4-hour chart for further insights. On the 4-hour time frame, we are currently observing the formation of a complete 5-wave downward structure, which consists of waves labeled 1, 2, 3, 4, and 5. This sequence is considered the first impulse wave. Following this, there is an ABC correction, which constitutes the second impulse wave. The anticipated continuation of the third wave should theoretically reach approximately the 161.8 extension level, indicating that the analysis on the 4-hour time frame is strongly leaning towards a downward price movement. Next, we have the initial first wave and the subsequent second wave occurring in this channel. If we patiently wait for the latest news updates now, it's important to note that the market is currently quite unclear and uncertain. It could potentially be a false breakout, or alternatively, we might be witnessing a bounce from the established channel. There's also a possibility of a deeper correction occurring. If the channel does break, we could see a continuation of the third wave. For me, the scenario would likely unfold like this. First comes the initial phase, followed by the second phase, and then a continuation of the third wave. However, since there are multiple news reports today, I do not rule out the possibility that everything could unfold in completely different directions than anticipated. There may also be a potential triangle pattern forming here, as we have identified 2 descending maxima and 2 ascending minima. If this maximum point is successfully updated, the price could increase significantly and completely reverse the current market trend, or it might lead to a deeper price correction. Therefore, I am currently holding sell positions on the euro currency. I initially sold the euro about 2 weeks ago, and last week I executed another sale, while this week appears to be experiencing a correction phase. I continue to maintain my sell positions, anticipating that the third wave of market movement will occur soon. As of now, there isn't anything particularly interesting happening with the euro. I have outlined 2 potential trading scenarios in the closed channel, and for the time being, I remain committed to holding my sell positions. Moving on to our next instrument, we will focus on the dollar-franc currency pair. On the daily time frame for the dollar franc, we observe that a 1, 2, 3, 4, 5 wave formation is taking shape, which is creating a distinctive triangle pattern. At this juncture, we require the price to break out of this triangle in an upward direction to signal potential buying opportunities, and conversely, a downward breakout would indicate potential selling opportunities. Everything that occurs within the triangle represents a period of consolidation, and we will closely monitor the lower time frames to analyze the price action further. Let's take a closer look at the detailed 4-hour time frame chart. The 4-hour time frame analysis for the dollar-franc pair indicates the beginning of an upward trend, which consists of an initial first wave followed by a subsequent second wave. The second wave that we are currently observing serves as a correction, while the first wave is characterized as an impulse wave. In this sequence, we can identify the 5 distinct movements labeled as 1, 2, 3, 4, and 5, which collectively constitute the first wave. Following this, we experience an ABC correction representing the second wave, which notably declined to the 236 level on the Fibonacci retracement scale. After this correction, we are now witnessing the emergence of a new first and second wave, indicating the beginning of a new trend. Additionally, we have been maintaining long positions on the dollar-franc pair since last week, and presently a third wave is developing. Place the stop after the second wave. For the dollar-franc currency pair today, I will only consider making purchases to effectively work on the development of the anticipated third wave. I carefully position the stop order behind the second wave, understanding that the risk on this particular trade amounts to $500, which is 0.5% of my account. Meanwhile, the potential profit stands at an impressive $3,300, resulting in a risk-to-reward ratio of 1 to 6. However, I consider that today there are important news events, so I will be cautious. The risk is $500, which might get hit by the news. With news, anything can happen. Many people ask me what will happen to the market when the news is released. Honestly, I genuinely don't know what will happen to the market once the news is released, as it is an inherently unpredictable process. Therefore, it is crucial to have open trading positions and implement effective risk control measures in case something goes unexpectedly wrong with the news release. I control my risks with stops set at 0.5 to 1% maximum. I'm now ready for the news, and according to wave analysis, everything looks structured as this is the first, this is the second, and this will be the third. This anticipated third wave should consist of 5 distinct movements, specifically labeled as 1, 2, 3, 4, and 5. In this context, we are considering the first set as indicative of a higher time frame, while the latter set represents a lower time frame, also denoted as 1, 2, 3, 4, and 5. Consequently, based on wave analysis principles, it appears that the market is just beginning its upward trajectory, and the dollar-franc pair may continue to experience an upward rise during this third wave. It is essential not to overlook the third wave, as it holds significant potential for profit, serving as the core of the trend where prices can shift dramatically. At this point, for the dollar-franc pair, I am still maintaining long positions, currently realizing a profit of $140. Now, let's move on to discussing the next instrument in our analysis, which is the dollar-yen currency pair. I see your insightful questions about what actions to take regarding the dollar-yen situation. The daily time frame analysis is important. I provided you with this recommendation to buy last week, and I want to emphasize that I still continue to hold those investment positions. Here we have the formation of waves 1 and 2, which signify the beginning of the overall trend. Next, waves 3 and 4 represent the middle phase of the trend, with the fourth wave taking the shape of a triangle. Triangles typically function as corrective patterns, leading to the subsequent fifth wave. The fifth wave, like others, typically consists of 5 distinct subwaves. We have identified the first, second, third, fourth, and fifth subwave clearly. The number 5 is clearly above 3, indicating that we need to rise. This will be the fifth subwave, and we still require the fifth subwave to fully complete the overall fifth wave. That's the reason I continue to hold on to my purchases for now. Next, on the 4-hour time frame, we are examining the dollar-yen currency pair. Take a closer look here. As the situation unfolds as follows, we can identify the first and second waves, indicating that an upward trend is clearly emerging. Following this, the third wave reaches the significant 161.8 Fibonacci extension level. Subsequently, we see a fourth correction forming, which has both a maximum and a minimum price point. The fourth wave then bounces off the maximum of the first wave, signaling the beginning of the fifth wave. Unfortunately, the fifth wave has not yet surpassed the maximum point reached during the third wave. It seems possible that a resistance level has formed at this point, which has prevented us from moving higher, resulting in a price bounce away from that level. Now we have approached the clearly defined lower boundary of the trend line. Take a look, as there was the first bounce, followed by the second bounce, then the third bounce, and now observe the significant fourth bounce taking place right before our eyes. So this entire upward movement for me is the first wave in extension. In extension 1, 2, 3, 4, 5, the first subwave has extended, then comes the second correction. Ideally, I expect the structure to consist of 3 followed by 4, then 5, and ultimately the fifth wave will complete its formation. I also note that as long as the price remains above this crucial trend line, the market will continue to be firmly under the control of bullish investors. This trend line serves as an important indicator of market sentiment, particularly while we are positioned above it. If once again today the news triggers a significant event within this market structure, we must seriously consider the possibility of selling. This situation could indicate a potential market reversal, leading to a decline in the price of the asset. That's why for now, the dollar-yen market is under the control of bulls. Above the trend line and below the trend line, we need to consider selling. In certain situations within the market, this phenomenon could represent a failure of the fifth wave, which is made up of 5 distinct waves. Notably, research shows that approximately 1 in every 10 market trends may conclude in failure. That's precisely why I will be keeping a close watch on this particular support level from which we have experienced multiple price bounces. The more bounces we observe, the stronger this support level becomes. A stronger level typically leads to a more significant upward bounce or, alternatively, a potential breakout. Additionally, if we do witness a breakout at this level, it will likely have a notable impact on the decline of the dollar-yen exchange rate, influencing market dynamics in that currency pair. That's why today, according to my trading plan, I will hold my purchases. If there are any attempts to establish below this trend line, we will need to consider selling, but that will probably not be today. We will look at it tomorrow. So, I would like to see, of course, after this necessary correction occurs, the subsequent market impulse develop, and that's precisely why I continue to hold on to my recent purchases of the dollar-yen currency pair for potential future gains. So guys, let's move on. The next financial instrument we will examine is gold. Now, let's take a closer look at our current status. We have an active open sell position on gold at this moment. By the way, I gave this recommendation yesterday. We sold gold and many made profits. Some have already closed their positions. My overall target was set right here. Yes, I'm aiming to take profit, but my position still hasn't reached that take profit level yet. What's happening with gold now? Sure, here's the expanded version of the text. Look, when we analyze the daily time frame, we observe a clear formation of 1, 2, 3, with the longest one positioned prominently, followed by the complete ABC model representing wave 4. Typically, I do not prefer to trade during corrective phases, but in this case, we decided to enter a correction on the 4-hour time frame with a short stop loss to minimize risk. The market experienced a significant reaction yesterday, resulting in a dramatic 1,000-point drop, but today we are witnessing a rebound and the market is rising again. I want to emphasize once more that you should be cautious and not always trade during corrective movements, as they frequently reverse unexpectedly and you often won't have a clear indication of whether the correction has truly ended. In my specific situation, I also chose not to take any profits, and the market shifted slightly, but I'm not in a hurry to make any purchases either. This is because the initial indicators that would suggest the completion of the correction will be the formation of a 1 or 2 pattern on the 4-hour time frame, which I am closely monitoring for clearer signals before acting. If you are currently working with the price level of 345, then it may be prudent to consider that it might be a safe opportunity to buy gold. This is because the market could still be in a phase of impulse movement, followed by a correction, then another impulse, and possibly yet another correction, eventually leading to a further impulse downward. You might decide to buy gold at this moment, but it's important to recognize that it could drop significantly on unexpected news or announcements. Therefore, you cannot be entirely sure about the best point to enter the market for gold purchases. I understand that we need to patiently wait for the formation of the first and second waves to make a more informed decision. I have noticed a considerable number of inquiries in my direct messages and on Telegram, where many individuals are eager to start buying gold. I often ask them, do you see at least the first and second waves forming to justify buying right now? There is also the possibility that the price might decline due to news events or during the American trading session. There should be clear and structured rules for both buying and selling. For the time being, I am maintaining my sell position, and if I observe the formation of 1 to 2 on the 4-hour time frame, I will then consider switching to a buying position. Of course, we must understand that this is the 4th wave correction that we have carefully analyzed and worked on. But when the initial signals indicating the completion of this 4th wave correction emerge, the 5th wave will begin, guys. Gold is likely to continue reaching new highs because we are currently only observing the 4th wave in its cycle. While we do have a defined market structure, it remains uncertain whether the correction phase has truly concluded. Therefore, we are currently maintaining our sell positions with our subscribers. Next, on the 4-hour time frame, we observe a similar pattern emerging. Initially, there were 5 distinct waves moving upward, followed by an ABC correction that retraced some of those gains. I was closely monitoring this situation in accordance with my trading strategy. Typically, the price action completes a correction around the 50% retracement level. However, in this instance, we didn't quite reach the anticipated take profit level, and instead we experienced a reversal. This brings us to an important question. Is this a genuine reversal indicating a change in trend, or could it potentially be an impulse move, suggesting that this correction might precede another upward impulse? That's precisely why I'm not closing the sell position just yet. I plan to wait for another significant wave downward before making a decision. Ideally, it goes in this precise order: 1, 2, 3, 4, and 5. We all know that the market usually moves in 5 waves, either 5 waves down or 5 waves up. To effectively prepare for purchasing gold, we must patiently wait for the clear formation of the sequence: 1, 2, 3, 4, 5, followed by another 1, then 2, and only after that should we focus on the development of 3, which signals a potential breakout from the established channel. In this context, we will enter the market, set a stop-loss order, and navigate through these 3, 4, and 5 waves diligently. This structured approach will serve as my model for buying gold. However, I observe that many traders, driven by intuition, are prematurely concluding that gold is on the rise and beginning to make purchases. A significant number of traders are engaging in this practice, and those who currently hold sell positions are feeling anxious as well, since gold's upward movement could lead to a correction at any given moment, potentially wiping out all these new buyers. That's why I'm holding off on selling gold for now. Also, let me show you the hourly time frame. If we look at the hourly time frame, this is the first impulse. This is an ABCDE triangle. This is 2. I shared this analysis with you on Instagram yesterday. We sold here yesterday, and the market dropped by 1,000 points literally in a day. What's happening next in the market appears to be a correction, specifically identified as a 4th wave. This indicates that the fourth wave serves as a corrective phase, and following this, there is a possibility of encountering a fifth wave decline. This potential movement aligns closely with my projected targets for gold prices in the near future. That's precisely why I'm not rushing to purchase gold just yet. The fifth wave hasn't fully played out on the hourly chart. It currently resembles a fourth wave instead. If I start to see a clear market model forming, such as a sequence of 1, 2, 3, 4, 5, followed by 1 again, and then a potential attempt to rise, I might consider closing my sales and getting ready to buy. To confidently buy gold, we need to wait for the formation of the first and second waves. We can't simply buy gold now during this fourth correction phase just because it's experiencing a rise. It has already risen significantly, and we must exercise caution before making any decisions. I understand that many beginners are starting to buy it now, which is interesting. The higher the price goes, the more new buyers will join this positive uptrend in the market. However, there is still the possibility of a fifth wave emerging, so we need to exercise utmost caution. For the moment, I am maintaining my sales strategy, and at present I have a profit of $1,000 on gold. Certainly. Here's the expanded version. Yes, it frequently occurs that when you sell gold here, your take-profit target doesn't get hit, leading to a reversal in the market, and it's unclear how this situation will ultimately resolve, either resulting in a stop loss or perhaps the fifth wave will materialize, allowing us to close through levels 3, 4, or 5 at our take-profit point. This uncertainty adds to the complexity of trading decisions in the gold market. The most important aspect in the market that will truly distinguish us from others is effective risk management. Even if I have to close a position at a stop loss, I should ensure that I do not lose more than 1 or 2% of my total capital. If someone is experiencing a loss of 10 to 20% of their capital, any single losing trade can significantly impact their psychological state in a negative way. It is precisely due to inadequate capital management that individuals develop unhealthy psychological patterns, which ultimately leads them to incur additional losses and lose control over their trading decisions and strategies. This entire process unfolds largely due to effective capital management strategies. It is essential for you to maintain a sense of detachment regarding the outcome of this trade, whether it concludes in profit or results in a loss. You have executed your responsibilities by making the trade entry, and now you simply need to wait for the 345 pattern to manifest or for a reversal model to develop. We begin to adapt our approach based on the movements and fluctuations of the market. The market simply does not care at all about our personal opinions or what we think regarding it. As I gaze at the ever-changing waves observing their dynamic nature, I find myself following their movements closely. It becomes clear that we must pay careful attention to wave analysis. This approach will transform our trading strategies, allowing us to remain flexible rather than clinging to a rigid viewpoint. Ultimately, the market operates independently of our personal opinions, and it often disregards what we think, revealing the importance of adapting to its fluctuations. Now, let's move forward, everyone, to discuss the next instrument on our agenda, which is Bitcoin. For Bitcoin, we can observe the formation of waves 1, 2, 3, and 4 on the daily time frame. Next, I am anticipating the continuation of the fifth wave, which means I expect to see a price structure that will surpass the maximum reached during the third wave. Additionally, it's worth noting that we experienced a prolonged correction pattern here labeled as ABC sub EC. When you take the time to thoroughly study all the various corrective waves, your trading will become significantly easier, as you will be able to clearly distinguish between impulse waves and corrective ones. You will gain a deeper understanding that what you are observing is merely a correction, rather than a downward movement that is already reversing, enabling you to effectively capture the final impulse waves, similar to what I am currently experiencing with my ongoing fifth wave. That's why, in my analysis, Bitcoin looks like a solid buy opportunity. We currently have a profit of 2,300, and we've been holding this buy position for approximately 2 weeks now. Over the weekend, the price was at 115, and now it's settled again at 113. Let's take a closer look at the 4-hour time frame. On this time frame, we can observe the formation of the first and second waves, which is an important indicator. This is what I'm referring to. If we see a similar pattern develop for gold, followed by a breakout of the channel, then I will consider buying gold. However, I won't enter from the current levels while it's merely on an upward trend. After this, we can likely anticipate the continuation of the third wave. Additionally, it's evident that the price movements up and down are designed to shake out short-term traders who have adjusted their stop-loss levels. Consequently, I am anticipating further growth, at least until we reach the third wave target of 161.8, which would also update the maximum of the first wave. Thus, my strategy for Bitcoin remains a buy, and I've set my stop-loss just below the second wave. It may also be prudent to adjust the stop-loss to these recent lows. What's particularly encouraging about this situation? It's encouraging that we are starting to see new highs. In this section, we clearly observe the first high point, followed by the second high point, and then the third high point, indicating consistent growth overall. 1, 2, 3, 4, 5. Observe the ABC correction, which indicates that the lows are gradually rising. Here we see these rising lows. The more we recognize these rising highs and lows, the stronger the overall uptrend will become. In this case, we are working our way up, so all this movement is a correction. If we switch to the hourly time frame, there were likely 5 waves and an ABC correction, and then it will be 1, 2, then 3, 4, 5, which will all be the third wave of growth, so we continue to hold our Bitcoin purchases. Regarding Ethereum, everyone, we also made a purchase of Ethereum at this point, and we are currently witnessing the formation of the first impulse wave, followed by a second correction. After this, we observed an initial impulse, another correction, and then another impulse wave. Now, at this stage, we are seeing yet another correction. I anticipate the following structure will unfold, comprising 5 distinct phases: 1, 2, 3, 4, and 5. However, I would also like to point out that there is a pattern resembling a triangle formation in Ethereum similar to this triangle shape. This indicates that there might be another extended period of consolidation occurring here, which could be followed by a significant breakout upwards, continuing the anticipated third wave in the trend. The second scenario is a breakout down from the triangle, moving down. Then this was the first, and it's all a correction, and then 3 down is also a scenario I consider, so we will keep an eye on where the breakout will occur and when the structure of the uptrend will break. For now, you can set a stop loss just slightly below this most recent low. Indeed, we currently have established the first low, followed by the second, third, and fourth lows. The presence of rising lows clearly indicates an uptrend, while the occurrence of rising highs further supports this uptrend. So everything discussed here serves as a correction. Ideally, we should begin moving within such a structured framework. As a result, our lows will gradually rise, and our highs will also increase, indicating that all trends initiate with consistently rising lows and rising highs. An uptrend only breaks when we update the nearest low, which signifies a potential reversal in the market conditions, suggesting that the market may experience a shift in direction. This process highlights the importance of monitoring these patterns closely to anticipate possible changes in market trends effectively. Therefore, regarding Ethereum, guys, I am still holding my purchases as long as we remain at $400 consolidating. We will wait. Next, regarding Tesla, there were some questions from individuals who were unable to purchase shares of Tesla stock. Typically, Tesla stocks open for trading around 16 Hauduwan, which means that investors can start buying and selling shares at that time. The trading session usually commences around 15:30, right before the official opening. This trading window closes at 12 I, after which it opens again, closes, and this entire process happens continuously every day from Monday to Friday. I believe that Tesla is currently showing promising signs. As I mentioned in my previous recommendations on Instagram and Telegram, we are observing the formation of the first, second, third, and fourth waves, followed by a potential breakout from the triangle pattern, leading us to anticipate the fifth wave soon. For all the eager beginners or even the most astute wave traders, take a moment to carefully observe this triangle formation that appears within the context of the second wave. Let's discuss this point. The book states that triangles do not occur in the second wave. In practice, I have been trading waves for about 7 years, 6 to 7 years, where I focus on pure wave analysis. I've noticed a multitude of compelling examples where triangles prominently occur within the context of the second wave, and it's important to note that both the second and fourth waves can indeed exhibit triangular formations. This phenomenon can certainly take place during a robust market trend, but it is crucial to understand that what you read in books and literature about trading is not an absolute rule. In fact, there are no definitive rules in the market. Everything that is written is conditional and often based on theoretical frameworks rather than hard and fast regulations. Based on my extensive experience in trading, I have often engaged in trading activities within those triangular patterns during the second wave, and I have frequently executed successful trades in the subsequent third, fourth, and fifth waves. In this particular example, you can clearly see a well-formed ABCDE pattern. The third wave materialized as anticipated, followed by a corrective fourth wave, and then we confidently entered into the fifth wave, ultimately realizing a profit of $1,600. I do not overlook opportunities like this trade. My approach allows me to generate consistent profits here. Those who strictly adhere to wave theory, there are some staunch purists who never deviate from the established rules, should understand that if you don't adapt and break those rules when necessary, you will likely end up being just an ordinary worker somewhere, toiling for someone else's success throughout your entire life. Conversely, those who are willing to slightly bend or break the rules are often the achievers who successfully challenge the system. In this bustling market, the theorists who offer their analyses are merely that, just theorists. They do not engage in trading themselves and therefore do not earn any profits from the market activities. When you finally begin trading and start earning profits, and after spending 7 years analyzing the market daily, you'll truly understand. Imagine the invaluable experience that you will gain over the course of 7 years. My extensive experience demonstrates that triangles can indeed occur during the second wave, as I would miss out on a significant amount of money if I chose not to trade them effectively. I fully understand that many people often refer to Elliott's well-known book, which explicitly states that triangles do not typically occur during the second wave of market movements. However, I firmly maintain that I successfully trade triangles even within the second wave, and whenever I express this opinion, everyone immediately assumes that I'm not adhering to Elliott's established theory and principles. This misunderstanding highlights the differences in interpretation and application of Elliott wave analysis among traders. So everything that is written in the book is conditional and subject to interpretation. There are no definitive rules. You will need to diligently uncover all these hidden secrets over the span of 5 to 7 years. The book offers a solid foundation of knowledge, but keep in mind that the market can change unpredictably, and new triangles may also begin to emerge during the second wave of trends and developments. Stay adaptable and informed. That's why, regarding the fourth wave, many argue with me about why my analysis sometimes shows that the fourth wave goes beyond the first. Let me provide a detailed expansion of your original text while maintaining the core message. I will clarify my point with a straightforward example. I frequently observe the fourth wave extending beyond the first wave, and as a result, I capitalize on my investments during the fifth wave. My primary goal here is to earn a profit rather than simply engage in theoretical trading discussions. It is essential for me to achieve as deep an understanding as possible in order to successfully generate income. Even in instances where the fourth wave surpasses the first and the second wave forms a triangle, I am confident that these trading patterns will prove effective over the long term. It is important to note that everything outlined in the book is conditional and open to interpretation. This message is specifically dedicated to all novices in trading. Those who adhere strictly to textbook strategies may end up becoming mere theorists. The reality is that once you begin trading with real money, you will quickly find that many scenarios will differ from what is described in theoretical frameworks. In my training sessions, I comprehensively cover all these nuances, explaining which aspects can be conditional and how the market tends to shape its waves. The book will not convey this crucial information, and if you overlook the essential points I have identified over the course of 7 years, you will likely forfeit substantial financial opportunities. There are numerous trends present in the market, and a significant amount of money ideally flows as illustrated in the book. While I wish all market trends conformed perfectly to the book's descriptions, we must acknowledge that this is the unpredictable nature of the market, where strict rules do not always apply. Many individuals put their faith in these so-called rules and then engage in disputes with me when the reality does not align with their expectations. This expansion retains the original message while adding clarity and detail, ensuring the text is comprehensive yet concise. So, everyone, concerning Tesla, we successfully executed the third wave of market movement, then entered the fourth wave, and are now actively working on the fifth wave. This illustrates how the market moves in distinct waves. It's essential to grasp that everything is conditional. There are no absolute rules governing these movements in the market dynamics. Currently, we have a profit of $1,600 from Tesla. The entry point was after the fourth wave, and I also shared this trade on Instagram. The risk on this trade was $858. The anticipated profit will be approximately around this level. I haven't firmly established it yet. This trade will represent a 1 to 10 position ratio. It's important to examine the entry point, the stop loss level, and the potential profit involved. For instance, Tesla presented an ideal setup for buying due to its short stop loss requirement. Those traders who did not purchase Tesla, I actually shared the entry point in the private closed channel. Those who missed this opportunity, if you are considering buying Tesla now, you will find that you need to set a much larger stop loss, which significantly diminishes the appeal of the trade. Conversely, had you entered the market earlier, you could have potentially earned 3 to 5 times more than what you would currently make by buying Tesla at this moment. Therefore, everyone, please pay close attention to my closed channel. I consistently provide updates and insights based on wave analysis. Just to let you know, there is currently an enticing 30% discount on the annual subscription plan, but this offer is only available for just 2 more days. This is a fantastic opportunity. You can purchase the plan for a full year or easily extend your current plan by paying the difference and switching to the annual option. With this plan, you'll be able to trade at any time for an entire year rather than incurring monthly charges. So everyone, the very last tool we have to discuss today is the oil market. In the current oil market, we are experiencing a notable and prevailing downward trend in prices. A descending trend is characterized by an initial signal where we observe the first and second stages of the trend. Following this, we identify 1, 2, 3, 4, 5 marking the third middle of the trend. Then we encounter a correction, referred to as 4, and ideally there should be a fifth wave which indicates further decline. I focus on analyzing the fifth wave of this downward movement. Each trading setup I create revolves around understanding and capitalizing on one wave or another. Currently, I am actively pursuing this trend. In fact, we executed a sale yesterday, specifically on Monday, when we decided to sell oil within the closed channel, achieving a selling price of $648. Let's now look at the 4-hour time frame. On the 4-hour time frame, we observed the pattern 1, 2, followed by 3 and 4, and currently we are patiently waiting for the anticipated 5th wave of decline, which is a small wave 5 that will ultimately drop below level 3. We executed our sell position at this point, and we have strategically set our stop loss just below our entry point to manage risk. Therefore, we are actively engaging in this sell position here, looking to capitalize on the expected downward movement in the market. This is a solid trade opportunity featuring a relatively short stop loss. We have accurately predicted the conclusion of the 4th wave of correction and are now focusing on the upcoming 5th wave. What is required from you is to strategically enter at optimal entry points with carefully placed short stops, risking $535 per trade. My anticipated profit from this trade is $5,900, which indicates a favorable risk-to-reward ratio of 1 to 12. I believe this situation will represent the 5th wave of decline, forming a 5-wave pattern. With thorough wave analysis, it's essential to attempt to make such trades as frequently as possible, ideally in the range of 1 to 5 or 1 to 6. This strategy ensures that your risk per trade remains smaller while your potential profit is significantly larger, rather than having them inversely related. Many traders I observe often engage in trading without setting stop-loss orders at all. For example, in the case of gold, I noticed approximately 10 individuals who made significant trading errors. They bought gold at various points, failing to implement any stop-loss measures. Consequently, when gold's price began to decline, these traders decided to buy even more as it dropped at lower levels, believing the trend was still upward. However, when the price fell sharply on Monday, many of them suffered substantial losses, leading to the unfortunate depletion of their trading deposits. This situation serves as a critical reminder of the importance of risk management in trading. Essentially, such a trading strategy is widely regarded as unprofitable and risky. It's akin to gambling. Sure, some individuals might enjoy sipping whiskey while trading in this manner, but I firmly believe that losing a substantial amount of money, like $20,000 to $30,000, is unlikely to bring any true happiness or satisfaction in the long run. It's much more enjoyable to visit a casino. Trust me on this, the experience is far more entertaining. You can engage in various games and truly have a great time, rather than just losing a staggering $30,000 here in a matter of 3 days due to the fluctuating price of gold. Therefore, it's always much better to trade just one lot, consistently set stops, effectively manage risks, and go to the casino solely for relaxation purposes. With that same amount of money, you can have infinitely more fun than simply watching a chart that moves unpredictably according to its own will. I have witnessed many lost trading accounts, and to the guys out there, I empathize with you. I understand that it is deeply unpleasant for many when such substantial amounts are lost. However, you must realize and fully comprehend that these losses stem from your own mistakes and your inability to trade successfully. There's often no structured education, no coherent strategy involved, just buying at random whenever I feel like it, removing stops whenever I choose, and then ultimately facing tears and sadness. Trading is often equated to gambling, and it simply does not yield consistent results. There should be clear and consistent discipline in this area, along with strict risk management practices for each individual trade. I fully understand that the deposit may grow slowly over time. While earning quickly may seem more desirable, it is actually the stability that is key. Therefore, I believe that pursuing stability is the most important objective to focus on in the market. If you're looking for quick cash, you might consider visiting a casino where you can enjoy a whiskey and try your luck at various games. Yes, there are indeed many different types of games available, and it's much more engaging to spend time there.